So let's get the final word as it is. Now we're wrapping up the year from the monetary policy side of things with a set of analysts who will be discussing from today all through to December the monetary policy focus and actions so far in 2017 and what the outlook is likely will be in 2018. Let's start this round of conversation. The first final word from Ayodeji Ebo, who is the managing director at Afrinvest Securities, is live to us from our studios in Lagos, the headquarters of Channels Television. Ayodeji, good morning. It's good to have you on the program.
Good morning, Brasin. Thanks for having me.
It's good to have you. So we're done with the monetary policy round for 2017, unless anything unusual happens in the next 5 weeks. The central bank will keep its fingers crossed for the year. Now, give us 1 or 2 minutes to recap what you think the highlights of the monetary policy cycle for 2017 was like.
Yes, thanks for that. We've seen for the major part of the MPC meeting for this year, we've seen in terms of based on expectation, the MPR has been held stable at the 14% for the year. You've also seen in terms of the CRR at 22.5%, that's the cash reserve ratio, also the liquidity ratio at 30%. What the CBN, the decision of the CBN aligns with our expectation, because when you see the current situation within the economy, we'll see stability within the FX market, it will be too early for the CBN even to alter the equilibrium. Some stability, we've even seen some of the gains that have been recorded within the economy, though there's still a lot to be done within that area. But it's going to be challenging for the CBN towards the end of the year to just alter that equilibrium. So either bringing down the MPR by whatever, even if it's 25 basis points, will alter a lot of things, signals to the foreign portfolio investors, and also a further tightening in terms of may also affect growth, though we've not seen significant correlation between the MPR as well as the lending rate, so may not necessarily translate into increased lending. So for us, I think the hawkish stance of the CBN, I think it's what I think should hold for now.
But again, Ayodeji, if you look at where we started the year from, the central bank sounded more hawkish, more tightening at the beginning of the year. But it looks like the last two policy committee meetings seems to be softening gradually if you take the MPC communique. And if you listen to Godwin Emefiele speak at 1 or 2 other fora, he seems to be more comfortable with the FX market. He seems very comfortable with the foreign exchange, foreign reserves position, the our current account balance, our balance of trade, and a few things like that. Do you think this softening we've seen in the last, since the half of the year, is a signal of where we're going in the new year?
Yes, we see it's a signal that maybe the MPC may, in the first quarter of 2018, may reduce the MPR. But when you do your proper analysis, most times it will not translate to increased lending. What leads to increased lending is when banks see opportunities within the economy where they can either support or complement efforts of the government, where policies that have been set in place that will attract investment into a particular sector. We saw during the privatization of the power sector, though there's still a lot of complexity within that area, banks when you see the amount of lending that went into that sector during that time. So it's something like that that would drive lending to the economy, to the SMEs. As long as when you look at the risk environment, power is still not very stable in terms of infrastructure deficit is still existing. So you would see that there will be nothing to attract the banks to lend into that particular space. Bring MPR to 10%. Would that translate into increased lending? I don't think so. It will translate into increased lending. Though we may want to say the high interest rate in terms of the fixed income instrument is also disincentivizing banks to also lend. I feel that even if interest rate within the treasury bills market also instrument comes down, lending will not translate into significant lending into the the private sector or into the economy if some major things are not taken care of.
Okay, very direct question. How would you rate monetary policy, policies and actions all through 2017? We're done, as it were. What's your take on what the last 12 months that we've traveled?
I think I would. It is more of a reactionary than being anticipatory. We've seen what has happened. The CBN most time sit back to study and see how the direction of things before it takes its decision. But would expect that maybe going into 2018, the CBN should take some bold step. I know they need to synchronize with the fiscal policy, but also trying to take that initiative ahead and based on the expectation. Like next year, we know election is also approaching. What are some of those policies that can come in place ahead? There will be increased spending, even by the government. A lot of contracts will be awarded for capital projects as we approach 2018. What will the CBN be doing in terms of trying to also check liquidity within the system? Is it still through the normal OMO auction mop-ups that CBN will still continue? What will they really be doing? How will they curtail the liquidity that may be channeled into FX, which may also pressure FX in 2018? So those are some of those things that I feel the CBN should also try to focus more on now, rather than stay back and see the direction of things before they react.
But again, it's always been said that the central bank, and it's been admitted that the central bank has limitation when it comes to the tools, the monetary policy tools it can deploy to tackle the problems we have. So the central bank is in a very tight corner. How do you think the central bank can get out of this for dilemma or a quagmire in which it's boxed to a corner and it has very little room or instruments to mediate in the market, to drag banks to lend into very critical sectors? How much more do you think monetary policy can achieve moving forward?
I think part of what I would like to suggest at this point is we've seen what the positive result based on the intervention loan within the agri space that is been yielding results. The CBN can also try to identify what other critical sector would government like to grow. If you also set aside intervention funds, though must be properly managed and monitored, then it will complement the efforts of the government to grow that particular sector that will have more multiplier effect on the GDP of the economy.
So we're practically, we're practically handing over the governance of moving the economy forward of this country to the central bank. That's what we're doing.
No, it's just, I'm saying...
to go that route.
No, I'm trying to say complement. The fiscal authorities are there to come up with policies that will attract private investors. Governments cannot fund most of the infrastructure deficits we have in the economy. So government is there to come up with policies, incentives that will attract and will also give assurance to private investors that once they, the government would adhere to whatever rules that is set before that will attract foreign investors to any particular sector. So what I'm just trying to say is the CBN can also be there to complement what the fiscal authorities would do.
Okay, let's move to the markets. Let's depth there a little bit. Do you think we've done enough to, as one of our viewers, Shola Ogunoyi, put it on Twitter, he says the MPC or the central bank is trying to placate the foreign portfolio investors with their decision on their key policy rates. Do you think we've done enough for the foreign portfolio investors to show very good behavior, quote unquote, on our part, and then we need to move on from just placating foreign portfolio investors with a currency devaluation, with high yield on our financial assets they are picking up for cheap?
I think, building trust also takes time. It's very easy to destroy it because of what has happened in the past. Some of the foreign investors are still skeptical, and you can see, looking at the investors and exporters window, it's over 6 months now since April that it was set up, And because of the consistency and in terms of stability that has been experienced within that window, confidence have begun to also improve. So we know we are not yet there, but taking baby steps, and as we approach, as they see some form of stability, despite the CBN intervention, reserves, external reserves have been growing. These are some of those things that would also add up and build confidence for foreign investors. We need those inflows to help stabilize so that we don't use all our external reserves to defend or to intervene in the FX market. So the CBN, we know how the Nigerian economy is structured. We can't do without these foreign portfolio investors. I know we still have a lot in terms of convergence of the exchange rates, which most of the foreign investors have been clamoring for, but with what we've been able to, the CBN has been able to achieve within the I&E window, over $18.5 billion in the last 6 or 7 months. And when you look at with the average volume that is being consummated on a daily basis, that is what will give confidence. The forward market, the NDF, non-deliverable forwards, when you also see people can also lock in and reduce their exposure to the market. FX supply has improved. These are some of those things that scared away foreign investors in the past.
So far in 2017, do you think the monetary policy environment had been favorable to local retail investors? Because it looks like the foreign portfolio investors seems to be the one having the carrot part, while the local investors, do you think they have part of that big carrot, or they're just holding the stick, trying to hang in there while we placate, quote unquote, the foreign portfolio investors?
No, indirectly, they've also been supportive of the retail investors, because when you look at how the effect is that when there was FX illiquidity, most of the quoted companies on the Nigeria Stock Exchange were not performing. A lot of them booked a lot of FX losses. But now with the improvement in FX supply, most of these companies can buy raw materials in terms of projection. They can plan in terms of the FX obligations, and some of them are able to even service their FX obligations. A letter of credit, for some of them, they've been able to access more opportunity within that area. So indirectly, as that adds up to the bottom line of companies that are quoted, it means that there will be improved earnings, and as a result, it translates into improved dividend for the retail investors. So indirectly, I feel also the CBN have been supportive of the retail investors.
Finally, what's your market's outlook for the new year?
Yeah, towards the end of this year, we would expect to see more sell-off, because when you look at mark-to-market on a year-on-year, well, most portfolio managers may have significant capital appreciation in their portfolio, but for them to book that income, they need to sell off this portfolio. Though it's not going to that will not translate into panic selling. It's going to present opportunity for new entrants, and we feel in the new year it's new target for portfolio investors, and we'll see a lot of buying, early bird positioning ahead of full year 2017 results, because we've seen the last 2 or 3 quarters of this year, for most companies have been able to stabilize, reduce their FX due to FX increase in FX supply. So as a result, we expect that results will be largely positive, and that will translate into improved dividend. So we'll see a lot of bargain hunting in January, after the sell-off that will be witnessed as we approach the year end in 2017.